Welcome, CB Danforth Brokers, and we have a lot of outside guests joining us today. Just goes to show you how popular Denise Lonas is, that's for sure. Thanks for signing in, and I am Dave Danforth, the designated broker of Coldwell Banker Danforth, and this is going to be a great session. First of all, I want to introduce my team who is helping me out with this meeting. We have Alex Eckhart, our branch manager of our Seattle office. He will be watching the questions as they come in and then handling the Q&A at the end. And we have Tom Ralph, the wizard behind the screen, making sure everything is running smoothly. So thanks, Tom, and thanks to both of you. Here's today's agenda. We should have time for questions and answers at the end, and we will do our best to be done at noon. Our goal was to help our brokers stay active and engaged during COVID-19. So we came up with the idea of Realtor Bingo. We just had our first blackout. Kirk Mitchell didn't just get a bingo, he completed all 25 activities on the bingo card. That is so impressive and no doubt will pay dividends in his real estate numbers this year. Congratulations to Kirk. And Coldwell Banker Danforth belongs to a group of West Coast brokerages. We are teaming up to bring you exclusive and free seminars and sessions no one else has access to, and this is one of them. I saw Nick speak at a Coldwell Banker's national convention a couple years ago and could not believe his amazing story. His inspiration could not come at a better time when we are all being tested by this COVID-19 pandemic. Check this out at noon tomorrow. And on Friday, we have Tom Ferry at 10:30. Can't wait to see what real estate words of wisdom Tom will have for us. These are just two of a handful of events that we will have available to you. We will send you out an invite link right following the session. So we now have 4 weeks of real estate under our belts with Stay Home, Stay Healthy. I thought it'd be interesting to look at the current 4 weeks compared to the 4 weeks in February before COVID was really on our radar. I have two takeaways from this. First, look at the nice weekly increase we are getting every week in April. New transactions have more than doubled compared to the first week. That's a real nice trend. The second point of interest is look at the last week of April compared to the last week of February. Those 2 weeks have the exact same amount of new pending deals. I know we are not up to normal April standards of busyness, but I found these interesting and encouraging. I'm sure Denise will have much more of stats for us to look at later. If you have any questions for any of our presenters, use the Q&A button at the bottom of your screen. Alex will do his best to get to all of them at the end of the session. Okay, let's get started. We have three outstanding presenters, Denise, Byron, and Bob. All are experts in their field and combined have almost 100 years of real estate experience. So let's start off with Byron and what is going on with the property management division. Please welcome Byron Hiller.
Hello, everyone. I have just about the 100 years all by myself, so thank you for joining us today. And I wanted to spend a few minutes talking about some property management changes. Most of these you're aware of, but these are recent updates that may help you if you manage properties or if you have your own properties. So we'll cover a couple of items here. On the next slide, we have a headline. That headline just came out in one of the publications that says 25% of residential tenants are not paying or partial paying their rent. That was April 1st. And so we expected that to hit us. We didn't know what would happen with the unemployment checks, with the PPP checks. So what we found in our local area and in our company, that number is much lower. We're probably closer to 10% that haven't paid or partial pay. It's a little harder with the commercial actually than the residential tenants, but there's a few bad actors that haven't paid. But I think most tenants understand that if they don't at least try, it's going to catch up with them real quick. And so we're seeing that people are paying, but we have our eyes out for May 1st to see that will be, I think, a real good test of the market. On the next slide, we had a recent Supreme Court, Washington State Supreme Court case. Next slide, Tom. That talks about first come, first serve. And this is the concept in Seattle for sure, and statewide, as far as our policy at Danforth is that landlords have to select the first qualified tenant and be able to show that they have a system to determine that. The problem is, in one word, discrimination. And this is probably one of the most violated acts by people who manage their own properties, is that they pick the person they like because of what they look like, or because they think they're the most qualified. But in this particular case, we have to be very careful that we can show that that first person who made application, as long as they qualify and meet our standards, which we have to apply equally to everyone, that person gets the property. So if you have questions about that, we can talk about it later. On the next slide, we know that our moratorium for evictions and late fees has been extended through June 4th. And so that means that we have to make sure that we don't increase rents, we don't charge late fees. We can start working on reasonable payment plans, but the state attorney general has looked at this carefully, or will be looking at this carefully, and make sure that the plans are reasonable. So what is a reasonable payment plan? Well, it's not a one size fit all. It really depends on the tenant. We have a lot of commercial tenants that are asking us to tack rent on to the end of the lease, which most landlords aren't wanting to do. We have some that want to spread it out over time. And I think that that's probably where most payment plans are going to be, is that over the next year or to the end of the lease, if it's a little farther than that, we'll be able to spread out some of the past due rent to help those tenants collect and pay on those. Moving on to the next slide, I mentioned there was no late fees. That's very important. We've had to make sure that our automated systems are taken down so that we don't charge people late fees. And the state attorney general suggests that payment plans should have wording that allow residents to renegotiate upon further government orders. So in other words, if you were to put together a payment plan today, it may not be the correct plan for a month from now. So in our practice here at Danforth, we're just waiting to do payment plans. We're asking people to pay as much as they can, and we will work on payment plans once the orders are over and we know where everything falls. So that's our policy right now. The next slide, should small landlords give up? I think, Tom, you got one. Yeah, there we go. We know that there's been some heavy hits for landlords, especially in Seattle, with the winter eviction ban and other policies. But I think overall, we want to make sure that we don't panic, that we know that a lot of small landlords are covered with exceptions, like with the winter eviction ban. Real estate's still a solid investment, so keep going, keep your chin up high. And if you own properties, it is tough, but it's manageable. Still a solid investment. So on the next slide, as you already saw, we're here to help you. If you have questions or concerns regarding property management, we'd love to talk with you about that. So give me a call or email, and we'll try to get you the resources that you need. So I hope that's helpful to give you a slight overview of what's going on in the market right now. Dave?
Thanks, Byron. That's you guys have a tough job right now. I don't envy you guys at all. You're doing a great job keeping it all together. So thank you for all your help. The next speaker today is my business partner for 30 years, Bob Frederickson. He runs our commercial division, and we'll let Bob take over. Hey, Tom, you got to unmute him.
All right, thanks, Dave. I didn't unmute myself soon enough there, but I wanted to say thanks for everybody for participating. We've had 260 participants. That's pretty cool. We love these Zoom meetings. I think we'll be doing this more and more into the future, and I can't wait to hear Denise and what she has to say. I love her approach and how she looks at stuff, at real estate issues. So looking forward to that too. So I just wanted to go into how COVID-19 is affecting commercial real estate. Give you a little bit of insight into some different issues that we're dealing with. You can go to the next slide, Tom. So unlike residential real estate, commercial real estate is not considered essential. So all my business is conducted from my desk where I'm sitting right now for the last almost 5 weeks, if you can believe that. We've been staying really busy, but at the same time, I can't wait till they get the shackles cut off me, because we're not able to do feasibility studies, inspections, have consultants go out to properties. I can't meet my clients, can't do tours. We can't do anything except for, some of the things that I'll go into a little bit more, but we really, we've been staying very busy. I've probably been putting in more hours than typical, but we need to get out and start doing some business. So hopefully that'll happen soon. Go ahead, next slide. One of the big pieces to residential and commercial real estate is obviously lending. COVID-19, like I said in yellow there, has created many unknowns in the lending industry. One of the biggest issues going on right now, and it's not a bad issue overall, it's the lenders are overburdened with the Paycheck Protection Plan loans, or the PPP loans. I've talked to many colleagues at different banks throughout the Puget Sound area, and it's all hands on deck to get those PPP loans through and into the system, and they're taking care of their clients. But at the same time, any new money requests or new applications that are coming in, or even applications that were in the pipeline before this all happened, that's getting put on the back burner, and they're going to get back to those loans later. So it's going to kind of slow down the system. Other types of loans that are going to be difficult to get in the future, construction loans are going to be very difficult. Lenders are going to be scrutinizing those loans big time. And a lot of these are being canceled for different reasons. They don't know multifamily. They don't know what tenancy is going to be like. Retail is a big unknown that we'll need to look back at that in 3 or 4 months and see how that shakes out. So I'll get into retail a little bit more later. And then my third bullet point at the bottom of the page here, banks are terminating loans at the last minute. So people are getting really knocked out at the knees in some cases. We had a 9-lot residential plat that was set to close. It was over in Kirkland. There was a land loan and construction loan, combination land loan, construction loan. 3 days before closing, they said they weren't going to fund it. So luckily the deal closed because we had a big non-refundable earnest money, but those are the things that are happening out there right now. So it's not that the lenders just don't know what they're going to see in the future. So we'll go to the next slide, Tom. Kind of looking at the different sectors, and we'll talk about how those look going forward. But distribution, warehouse, and I'll throw manufacturing in there too. That's a bright spot. E-commerce, we're all supporting e-commerce right now, so that's going to support distribution, warehouse. The manufacturers are slowly ramping back up, getting back to work, so that will support that piece of the industrial market. Multifamily, we can talk about that. They've had a big run up over the last few years, lots of multifamilies being built. Vacancy rates were already going up regardless of this situation that we're in. They've gone up a little bit more with all the layoffs and those sort of things that we've seen happening. Byron mentioned the eviction moratorium. So we really don't know what that vacancy rate is. We'll know, I guess, after June 4th, once that moratorium's lifted, we'll get a little better insight as to what the true vacancy rate is going forward. So we'll see what happens there. Another article that I read earlier today on apartments.com, it was interesting, and I think it works for residential real estate too, but they were looking at search habits of the users of apartment.com and where they're seeing apartment residents searching for apartments outside of their market. So they look at like Las Vegas, where it's being hit really hard, that all the hotel industry is being hit really hard. Lots of people in Las Vegas are looking in different states for where they're going to move next to get employment. So Vegas, Florida, some of those areas, people are looking outside of those states. One of the cool things about our state, Seattle, is our tenants aren't looking outside of the state, but we have other people from outside of the states looking at Seattle. So, you know, so that's showing that people are going to move into some of our apartments from out of state. And I would say that that's going to be the same thing for residential real estate. People are going to be looking at Seattle to move here because we've got a steadier economy than other areas. So that's a bright spot. Hotels, they've really, they were doing great before COVID. Since COVID happened, obviously they've dried up. Lenders won't lend on hotel deals right now. They won't even come close to those deals. So that's going to be a hard hit sector, along with retail. Probably won't be as hard hit as hotels, but retail, you know, we're all looking at this, wondering what's going to happen with those small tenants. And the small tenants in retail strip centers and retail centers, they typically pay the higher rents than the bigger tenants. So you need those small tenants to support. That's how the landlord supports his investment. So we need to have another one of these meetings in 3 months, and then we can kind of figure out how all this shakes out. But that's what we'll be looking at down the road. But right now, banks are backing off from hotel and retail. So you can go to the next slide. Opportunities. This is bringing a lot of opportunities. One of the main ways we communicate with our clients and network is through web and social media presence. So we've been taking a lot of time on improving our bios, redoing our pictures, looking at all the social media that we do, making sure that it's effective and crisp and clear and professional looking. So we've spent a lot of time on that. One other aspect is, you know, contacting your existing client base. All your clients that you've dealt with over the years, you need to be talking to them. They want to hear from you. They want to hear your insight on the situation. I've been doing a lot of that. I know Dave and I did a lot of that back in the last recession, and it really paid off big time as we came out of that recession. So you really have to contact those existing clients to set the table for when this fog lifts. Cold calling, you've got a captive audience right now. So cold calling is one of the best things you can do. I've been cold calling on multifamily in Tacoma and Pierce County and having great success at it. I had two Zoom meetings with the owners of the multifamily properties, a 35 unit, and then another owner who owns over 15,000 units across the US. But we had Zoom meetings with my client, and we talked real estate. We talked about their assets, and we're going to have more conversations going forward. So that's going to turn into more deals. So we all have to look at this time as a chance to set the table. When the fog lifts, we'll be ready to make some money. So you can go to the next slide. And there's my contact info. If anybody has any questions, give me a call, shoot me an email, and I would love to do another one of these in a few months so we can kind of see where we're at. Thanks.
Thanks, Bob. That's a great idea. It may be even quicker than 2 or 3 months, because it's almost like things are changing on a weekly basis right now. It's hard to plan for anything more than a week out. That's for sure. I'm so happy. I called Denise up last week and was able to talk to her, and she was excited about coming on and getting back with our agents again. We brought her in on February, I think 27th, so it was almost like exactly 2 months ago, and man, have things changed a lot. So I can't wait to hear what you have to say, Denise, and welcome.
Well, first of all, I'm thrilled to be here, and you know, I love you guys. I love what you're doing for your agents. I love that you're keeping agents kind of abreast of what's happening, because things are moving extremely quickly right now. And what I want to do today is just kind of give everybody some insight and to help everybody calm down a little bit and to get out of their, you know, stay-at-home mindset, and let's talk about what's kind of really going on in the market. Also, I love the plug at the beginning where you said we had like 100 years of experience. Oh my gosh, I can't tell you how old I feel right now, but I'm going on 28 years in the real estate industry. I have been an analyst and investor, developer, you name it, I've done it. New construction has always been, you know, my baby. I've been a managing broker, and now my favorite thing to do is analyze markets and to analyze what are people doing? What is the mindset of buyers and sellers out there? How do certain events affect things in the market? So I'm just going to go through a bunch of things. I'm going to show you some actual numbers so I can put things into perspective. I've got lots to show. I'm going to show it in a kind of a brief period of time, and I'll go as kind of rapid as I can, but I want to be as thorough as I can. So we also will have time for some questions after. So first and foremost, the thing that I always look at, and whenever I say this at every one of my events that I do when I'm predicting markets, you have to look at different types of crises that happen in a market and how those things affect a market. Traditionally, prior to COVID, we were dealing, and I'll talk Pacific Northwest, with both an affordability crisis, a new construction crisis, and an inventory crisis. That was driving prices up. That was taking our, let's say, our core of King County and pushing what I call flow over counties. That was pushing Snohomish County into just a really robust market. Same thing with Pierce County. So lots going on in the Pacific Northwest. Strong market, strong conditions. I will say that when I look at markets, it doesn't matter what the event is, whether it's 9/11, whether I call it the corruption crisis of 2008, and that's a whole, I could talk about that for hours, but really there's always an event that causes a change in real estate. Real estate markets do not just die of old age. So these are the most common types of crises that we have. We are not in a housing crisis, but we are in a health crisis. And the problem with the health crisis is the health crisis scares the heck out of people, and they don't know what to do. They don't know what the outcome is going to be. Our world changed in the Pacific Northwest on March 5th. That was the starting date of when the world really figured out that we've got something going on. That's it was very frightening for everyone. Now, when we look at, okay, what's going to happen? There are only 4 things that can possibly happen, 4 ways that our markets are that any market recovers: L-shaped, U-shaped, V-shaped, or W-shaped. And people don't talk about the W-shaped too often because because it hasn't happened as much. Normally, you've got a market that recovers over time, and there's certain things that cause it to do that. And I'm going to give you a prediction of what I think, what type of market recovery we're going to have. So when we look here, and I've given some examples there, but an L-shaped recovery just looks like a big L. You have things are going along great, and all of a sudden there's some event, the market tanks, and it takes a long time for recovery. That's your typical L recovery, okay? V-shaped is where something happens, there's a sharp decline, but the fundamentals, the foundation of the market was very strong prior to the sharp decline, so you have a very sharp recovery. That's your V-shaped recovery. A U-shaped recovery is where there's a sharp decline, and then there's kind of like some blips along the bottom, but the bottom lasts a long time. So what I like to do is I like to look and say, historically, what does this all look like? And I'll show you the W market in a little bit. So this is my bad drawing, but I want to give you an idea. Green is good, red is not so good, and then the blue lines basically show the direction of the market. So in this particular case, when Katrina happened in August of 2005, that market And if you study historically what's going on, I like to study events. What events causes things? For example, in a little while, we're going to talk about the West Seattle Bridge. That's an event. All of a sudden, you go to bed one night, you wake up the next morning, and your commute time is doubled. How's that going to affect the market? I think I have a prediction for that. So based on the past. So when we look at things like what happened, how these recoveries took place, Katrina was a typical L recovery. It was the market was really inclining very fast. Katrina hit, and there was a long recovery period. 37 months is a long time. But after that decline, then there was a steady rise. So even though it took 37 months to get out of it, once the rise happened, you notice that it's been very steady since then. If we look at what happened at 9/11, 9/11 is your traditional V recovery. It was dramatic. It took about 13 months to get through. A V market recovery is about a year recovery, okay? Then we look at a long recovery. That's the U recovery. Our mortgage implosion of 2008 right through to 2012, if we look at the actual month's time, took about 42 months for recovery. So what the burning question everybody wants to know is, what about us? What's going to happen now? How is COVID affecting things? And they're not talking about having a vaccine for maybe a year or longer, and that's what ultimately people are thinking they need. Now, nobody for sure knows exactly how long the bottom will last, but if you look at, there are some pretty strong clues. You got to look at listings and pendings and closings, but even look at, I really like to look at the now of the market, which is, I really study listing and pending numbers, and I study also what can cause challenges. This health crisis is an interesting one because, like Bob said, I'm not concerned about residential real estate. I'm not concerned about our market recovering. The foundation and our fundamentals are extremely strong in the Pacific Northwest. I'm worried about the small business owner who didn't get a PPP loan. I'm worrying about the small business owner that got the PPP loan, but their business doesn't come back as strong. So those are the things that we worry about. Now, I think we are probably likely to have what might be which we haven't seen for a while, is a W recovery. A W recovery is where we decline quickly, we start to come back, and then maybe we go down a little bit until we come back again because there's concern, and you have an issue that isn't just resolved with a solution, a quick solution. This is a situation where, I'll tell you right now, if we find out tomorrow we have a vaccine for COVID, we are going to be in a super strong, tight V recovery. Our demand alone is going to create, to have us in a stronger recovery than a U. We don't have the challenges in our area that some other areas have that would warrant a U. So I already know that we're not an L recovery. I know we're not a U recovery. So we're either a V or we're a W. And I would say that there is a very good possibility that we will be a W recovery. We're going to have some bounce back, then we're going to have some concern, then we're going to have some bounce back. But let's have a look at housing market and past issues. So when SARS happened, prices dipped, inventory dipped, and then they rose, and it ended up, the market ended up stronger than before. When the H1N1 flu happened, same thing, prices dipped, then they rose, then they came back stronger than before. Same thing with 9/11, same thing with the Great Recession. Remember this, if your market has a strong fundamental base when you start, you will still have that strong fundamental base. The thing that we have to be thinking about isn't again, the residential side I'm very, very confident about. I'm just worried about my fellow small business owners. The housing market has been extremely resilient through prior events, especially in the Pacific Northwest. But let's look at Washington State. Let's look at some facts here. I want to talk about supply and demand and why I'm very, very, very strong on this next point, okay? In order to have a strong market, you have to have strong growth. If we look at our area and we look at the growth and the increases, we have another issue that no one's talking about, and that is Washington State already had this increase in population growth. Now, jobs drive where people want to live. And the thing is that this COVID-19 crisis is also having people, they're stuck at home, they're rethinking, they're out looking. People are actually right now redoing resumes. They want to work and they want to work somewhere else and they want their dream job. And many dream jobs live in the Seattle marketplace and in the Pacific Northwest marketplace. So we are going to see, I believe, an increase in people coming to our area looking for work. Now, so you have your demand, which is obviously your population and all those other things. But then we have another issue in Washington State. Washington State has two very strong acts that really prevent us from overbuilding, overgrowing, and that is the Growth Management Act and the Shoreline Management Act. But I want to show you why that's important. And why that's important is because when I'm studying different markets, I look for coincidences. I look for different opportunities. I work with an investor group. I'm constantly looking for where are great places to buy, to invest in. And isn't it interesting that there are some states out there that are strong investor states for me and for the states that I like for investment, and have a look at the states that have Growth Management Act legislation. We have a lot, and I mean a lot of clues right here. The coastlines, think about this. The coastlines are the majority of the states that have growth management acts, and they have that for a reason. Washington, Oregon, California, strong markets, and are going to continue to be strong markets. Our demand is strong. And then on top of that, throw in our employment opportunities. Now, I'm not saying that COVID is not bringing a lot of challenges. It absolutely is. But I am saying that the one thing we have to be aware of is we always have to look at the states that end up with a lot of challenges after any crisis are often states that have other issues that surround their markets. And for us, the thing that we have with our supply and demand is that we've got this Growth Management Act that limits. We also have our Shoreline Management Act, what's happening in the state of Washington right now with getting developments done and permitted and now financed. I'm involved with the development right now. That development should have been done, built, completed 2 years ago. It was put on hold again a few months ago. I literally just got a clear on it a week ago, and that was only after some strong pushing on my end and some strong threats of get your business together or we're going to have some problems. And I'll tell you, that's what's happening right now. So if you can't develop lots, if you can't get the funding for lots, as Bob was saying, our construction loans are difficult to get. If we don't have construction loans, we don't have land loans, we don't have our development loans, and we don't have that product, that's hurting our building industry. We already came into this with a damaged building industry from what happened in 2008 because we've gotten rid of so many great builders and tradespeople. So we still have a supply and demand issue. COVID-19 is not going to change that. When we think about new construction again, we are still down well below our minimum. So we have to remember when we're looking at any crisis in the market, we have to look at, okay, what is the cause of this? Where are we going to be when we come out of this? We still are well below the line of where we need to be. In 2019, our new construction for single family and condo sales, we were well below what we needed. So we looked at what we had, what we needed. We were off 27% in our single family, and these are huge numbers, off 34% in our condos. So the thing that we have is we've gone into COVID, we have strong demand, we got people coming here, we still do not have our new construction in order. But let's look at the facts. Let's just look at our markets. Let's read the numbers. Let's look at the charts. Let's see what it says. So let's have a look, okay?
Hey, Denise.
Yes.
I just wanted to real quickly remind everybody that if you have questions, there's a Q&A button at the bottom of the screen. We had a few people come in late and they might not have got that information.
Perfect. That's awesome. And feel free, you guys, if you have a question, put it in there. And then as soon as we're done, any questions you have, we can do a real fast and furious, hey, what do you think? And I will tackle any question that you have. Okay, so let's have a look at King County. And if we go back to 2018, and we go right up until the end of March. And this is also, by the way, remember COVID was March 5th. So our pending numbers, if the market truly crashed, our blue line would have crashed with it. Okay, forget the listing number for a minute. But what we have seen in King County, and anytime the lines overlap, like where I have shown the red circle, that's a very, 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 very still strong market. So in King County, we still have this goes right back to the demand, supply and demand issue. We have a supply and demand issue still in King County. That will continue to drive the market. That's not changing. We also, when we look at, let's go back a few years and let's kind of look at what happened here. Right off the gate in January, what we noticed is that listing numbers came out of the gate slow. Okay, so I read an article recently that said this: oh, King County listing numbers way down. That means the market's in big trouble. Incorrect. That is not correct. What that means is, it goes back to what I was just talking about. We did not have enough inventory to start with. We started January right out of the gate with as many listings as we could possibly get, and those listings were selling multiple offers. People started January with a robust, we saw a really strong start. You cannot just look at active listings. You must look at the relationship between actives and pendings and what things are actually selling for and price points. Okay? When we look at pendings, let's look at these pending numbers, and we did this in a way so that we could see our week over week literally numbers, and I'll show you a bigger chart of that soon. But again, our pending numbers jumped right out of the gate. Now, why has that green line not plummeted? It hasn't plummeted because we still have demand. Now, this is, well, we have people at home, social distancing. They are staying at home. We have a governor's order. I've told everybody, be careful and be aware, because the moment we're allowed and being told we can get out there and do things, people will be buying. The other thing is, we have, instead of having 2 trillion, we have 6 trillion. One of my lenders that in California is a big lender guy. I talk to him all the time. I really want to know what's happening in the California market. He said that they right now have $6 trillion worth of locked loans on the books across the country. And it is, we've got people that have locked money and are getting ready to buy. So things may be quieter where you're at right now, but have a look, for example, at the beaches in California. Have a look at the beaches in Florida or in Georgia. The moment that any governor says, hey, we can open up even slowly, you've got people that are just out in droves. People want to get back to normal. But now let's have a look at our new listings per week, and we're going to look at 2019 to 2020. And what's really interesting here, if you look in terms of that March 23rd right up to about that April 12th period, there was that period of, okay, the listing numbers compared to last year came in lower, but now we're seeing, again, we've seen April 13th to the 19th, that week people are starting to bring those listings back on the market. Do we have less listings week over week from the previous year? We do, but that's because we have less inventory. We just do. King County was one of the first markets hit by the pandemic. It was one of the first to suffer this and be told we had to be locked down. We also have been, and it is proven that we are better suited to be a stay-at-home work model. We've actually done pretty darn well. We have now really good, promising signs of recovery that I'm seeing. I think we've absolutely hit our bottom based on the numbers, and I believe that we are getting into our recovery period. Now, the thing that you have to understand is that there will be changes. Let me tell you, the minute we all get back to work, guess what's going to happen? We're going to have employees that say to us, wait a minute, we like working at home, not 5 days a week, but hey, can we change our work model? You have businesses that might say, wait a minute, and this is, Bob, this I think is going to also affect you. I think we're going to see a shift and a change in, a lot of companies that say, you know what? We don't need all that space. Let's save some money on space. Let's let our employees work at home a day or two a week. I have a large real estate company that contacted me with an email this week. I'm not doing it, but they asked me, hey, could you help us we want to change our footprint from to having so much space per agent, because normally there's a per space square foot count, and they want me to help them figure out what is the perfect per square foot count now per agent based on after COVID, and they want to now they want to get rid of some of their offices and they want to become more work at home. You're going to see a lot of changes in the world about this. But then the other thing you're going to see is you're going to have people that say, wait a minute, being at home and working at home wasn't all that fun. You're going to have two trains of thoughts, okay? Snohomish County, similar situation, except for Snohomish County has had an even stronger, Snohomish County has been such an incredibly under inventoried market. And we've seen that, but again, certain price points, certain styles, but this is not the signs of a crashing market. Even with COVID, I'm not seeing these sharp declines, not like I have in 9/11, not like we saw in 2008, right? So again, Snohomish County, we started out a little slower, and then we started our upward rise, and we're gonna see as this continues. But overall, what we're seeing is across the board, most of the counties in the Pacific Northwest, the big ones that I'm tracking, what we're noticing is that all counties have started with less inventory, but we're not seeing our pending numbers slide drastically. Snohomish has started off very strong. It's less than what it was in 2020, but it had a stronger start in 2019, had a way stronger start. Snohomish County's start was better than 2018, better than 2019. It's not in a position right now to surpass 2019 and 2018 because we are still, in essence, kind of closed for business. When we look at Snohomish County new listings, we saw that March 16th, this is really interesting. March 16th to 22nd, if you look at that is what I call the COVID effect. And that is all of a sudden people were freaking out about COVID and they're like, okay, I think we're going to list our properties. I think we need to sell. That's why we saw this surge of inventory. And then we see again, the world starts to relax and realize that that's probably not a smart thing to do. And now we're back to healthy, reasonable new listings. Pierce County has continued its growth. There's so many opportunities in Pierce County. Look at what's happened even right now in Pierce County. There's not enough inventory. Now, obviously people might say, maybe that's because sellers are finding that this isn't a good time to list their property. I'll tell you right now, I've got clients that are listing properties right now. I've got clients that are selling properties based on video, photography, and people are writing offers. I will tell you, if you could take these charts and show your clients what's happening in the marketplace and that the world is not ended, we are not at the end, that this is an opportunity. There are opportunities right now in this market. Pierce County, again, a good start to the year, and just wait until the numbers come in for the end of April. I'm going to be very, very interested to see that. Look at Pierce County pendings. These pending numbers have started extremely strong. So I feel very good about where we're going. I don't have the fear that some people do, but then I follow the facts. Notice in Pierce County, we saw the COVID effect again. That was, again, if you go back to this period of time, by about March 16th, the mid-March to the end of March, but there was about a week there where the news was so bad that in every county we saw a surge of inventory. Then you'll notice that's tapered down. Remember, people want to get back to work. They want to get back to living, and back to living means back to spending, back to buying, back to being involved. Thurston County, wow. Where's the inventory in Thurston County? Why are our pending numbers going up? If we were in a truly crashed market, you guys, that number would have continued down. We're not. We are still in a strong residential market. Commercial's on hold. We're not on hold. We are not. Commercial maybe, poor Bob, but we are not. I know, poor Bob. Thurston County, again, we started out, where is the problem in Thurston County? Let me go back to the slide. If you look right here, you will see that Thurston County doesn't have enough listings. That is what is causing this great big divide here. And that is why the Thurston County market is seeing they're going to see multiple offers still. They're going to see a robust market. So, and the pending numbers, why are our pending numbers straight up in Thurston County? Where's the crash here, guys? I'm not seeing it. Okay, same thing in Thurston County. Thurston County, a little bit more reasonable in terms of the COVID factor. You didn't really have the same freak out, but others did. So, okay, let's move on. I'm going to talk for a few minutes about the West Seattle Bridge. I'm hoping my pace isn't too fast, but I got so much I want to share. I'm just sharing it all. Okay, first of all, people freak out anytime there's change. And this was a big one. People all of a sudden like, wait a minute, we are in the middle of the coronavirus and now you're going to hit the bridge on us. This is a big deal. Well, first of all, there's been many news reports. Please don't listen to all of them. You'll hear West Seattle market is strong because in spite of the bridge closure, you will hear West Seattlers are going to move out of West Seattle. You got to be careful, get away from the news, look at the facts, keep your numbers, look at the numbers, okay? So the thing we have to look at, and whenever I look at something new, I want to look at the research, and I'll share some research with you. So first of all, West Seattle, by the way, weathered our 2008 to 2012 U market recovery extremely well, extremely well. West Seattle's strong. It's got this cool vibe. It's this outdoor haven. People like living there. It's got a strong community. We're talking loyal. If you are from West Seattle, man, you are neighborhood loyal. So there's a lot of really, really, really strong fundamentals for this. Really strong. And I'm really, I feel really good about West Seattle, but I'll also tell you when I have a question, I start doing research. So first of all, you have two camps. You've got the camp that says, wait a minute, I'm really concerned about this. What if my house value goes down? How am I going to handle this commute? What if I have to get up earlier and handle my kids? And oh my goodness, I can't handle this. How is this going to affect the local businesses I love to go to? And what if my nail salon is closed and Starbucks isn't there anymore? And oh my goodness, and I can't possibly add more time to my commute. There's that camp. Then there's the other camp that says, okay, I kind of like this. I like it. I love the island. I love the community that I live in. I'm here for the long haul. I'm not worried about this. My home's probably going to be worth more anyways. I can telecommute. I'm good. I've got this new cool hip work thing. I'm not happy about it, but you know what? It's for bridge safety. You have two camps. You also have two parts of West Seattle. You've got the north and the south, right? So there are two totally different trains of thought. Now, the two West Seattles, the south will not be affected as much as the north. The south will not see their commute times as bad as the north, but there will be people that this is horrible for. You can't say that this isn't going to have effect. What I look at, what is the short term? What is the long term? Now, the thing you need to know about, this bridge has had issues for a long time. I only went back to 2013. There has been a lot of issues. The signs have been there already about the bridge. The bridge has had some issues, and you know what? It's a safety issue that needs to be addressed. I don't know whether it's going to be, whenever anybody says to me something will be fixed by, and they give me a date, I always add 50% onto that time. That's just, I'm in done new construction. I just don't. So I tell people, if they tell you 2022 and it's 2000 right now, 2020 right now, that's a 2-year thing. Add another 50% of 2 years, add another year. If they tell you it's 5 years, it's going to be 7.5. So I'm just saying that that's the other part of it, is we have to, as agents, we have to be honest with people that we are dealing with. There have been many bridge closures. In fact, there's a really cool place. You just go into Wikipedia and type in, and just go in there and type in all the bridge collapses. There's a great website, engineering.com. They study all the bridge collapses. I said this to Shauna in my office, I don't know if I'm going to drive on a bridge for a while. I'm traumatized. All the information I've seen about bridge closures, we've been here before. Remember when the Magnolia Street Bridge, remember that had to have its repairs. We lost a bridge down Skagit River. That needed to get repaired. Remember the Tacoma Narrows Bridge. That the state of Washington has been here before. But okay, what's the housing impact? Okay, well, let's look at some big bridge issues. Down in California, when the Cypress Street Viaduct went down in Oakland, doesn't matter what caused it, doesn't matter any of that. The bottom line is what happened to real estate in that area. Okay, initially there was all this panic and freaking out, but guess what? Is that area strong? Absolutely. I've looked at about 50 of the top 100 in the United States, and I'm not finding these huge market issues afterwards. So do I think, bottom line, the West Seattle Bridge is going to cause prices to decline drastically? No, but like anything, guys, real estate is a long-term hold, not a short-term. If you have a seller saying, oh, I think I want to sell because I think this area is going to go down in price, I think you need to talk to and find out. If a seller says to you, listen, I have to sell because the commute time doesn't work for my family anymore, I'm good with that, right? I'm not good with somebody selling out of fear. We've been here. Washington State has already addressed so many bridge failures that I wasn't surprised that the West Seattle Bridge was shut down. I was surprised it wasn't shut down sooner based on its long list of issues. So in summary, short-term, long-term, there will be some commute nightmares for some, particularly those that live in North Seattle or in the north of West Seattle. The commute will be more tolerable for the people that live in the south of West Seattle. Commute depending sellers may decide that they have to sell. Okay. Pendings may stall a little bit because people are trying to figure it out. And the thing is, until people know and have a firm, this is when this is going to be repaired or whatever, until they know, there's always that concern. Multiple offers may decline, but guess what? In some hot neighborhoods over there, multiple offers are still happening. I was looking at some numbers. One of my clients actually that works at West Seattle Marketplace sent me some numbers yesterday. Found it very interesting that we're not seeing, again, I'm not seeing this happen. Long term, there will be commute nightmares for some, but not for others. And they're going to say, hey, it's tolerable. And you know what? I'm a hardcore West Seattle resident. I love it here. And then there are, however, a group of wannabe residents that are looking at properties right now in West Seattle. Do you know that my investment, I have an investor group that I consult with, and I have a number of those investors who are saying, hey, we're sending, one of my investors is sending out a postcard to West Seattle neighborhoods saying, hi, I'm an investor. The bridge is basically, the bridge situation's awful. It's going to make your commute terrible. If you want to sell fast and you want to sell direct, call me. I have investors that look for opportunities like that. So I will say there will be those types of things that happen, but I feel very strong about West Seattle. Okay, so before we get into that, we're going to open it up for questions in a minute. I hope I've tried to pack in as much as possible. And but before we maybe ask questions, I'm going to just have Shauna from my company share some things we're going to do. People need information right now. They need help right now. They need support right now. And Danforth, you guys, the support you give your agents is incredible. I appreciate you even calling me and saying, hey, can you help with this? Can we get your voice in there, which I really appreciate. And for that, we want to make sure that anyone who's listening on the webinar today, they want data, they want information, and we're going to make sure they have it. So Shauna, you want to share what we are doing for the Danforth group?
Absolutely. So everybody who's on this call is going to get a follow-up communication from the Danforth group here. And one of those things is going to be a 1-month membership to our Club Zebra, which is really cool. So we've added a lot of really neat features over the last couple of months, including Denise does a lot, we call it Denise Live, Tuesdays at 9 a.m. It includes like a tip. It includes some question and answer. This next week, we're actually talking about the different graphs and information from the MLS that you need to be showing your clients right now. So that's going to be really exciting. Tuesdays at 9 a.m. and that's every Tuesday at 9 a.m. So you can just mark it on your calendar. Denise is also doing her market survival guide Fridays at noon. And that's a little bit of like what you saw today. So a little bit of a market update. Here's some updated numbers that you need to know. So those are every Friday at noon. And then we've also got articles to send out to your clients. We've got lots of COVID-19 communication pieces in there as well. And then you've got our huge vault of tools, videos, Excel charts, calculators, all sorts of interesting things, thousands and thousands of documents that have been curated by Denise herself. And you get that for the entire month of May. So I really hope you when you get the link to this is what it's going to look like. You just join, and then you're good to go for the month of May, and you get 8 great content calls with Denise. So hope
and
you
just
enjoy.
a comment, the live, a lot of also the live calls I do on Tuesday are how to talk to clients right now. What does that conversation look like? What do you need to show them? You can't just yak at people. Show them some graphs and some charts. Show them what you're seeing in the MLS. If someone is thinking about buying and then they say, you know what, I think I'm going to wait till COVID's over. wait a minute, that's an opportunity. Or I'm thinking about selling, but maybe I should wait until the market's stronger. Wait a minute, that's an opportunity. It's about learning, really learning how to talk to those clients right now and to deal with that. And the reason that I am doing this, first of all, because my relationship with Danforth is extremely important, but any company right now who is doing the type of trying to give their agents help like this, I have great respect for, and I will do my part to give back and help. So I'm happy to open it up for questions. I hope we're okay for time. But go ahead who's got questions? I'm here.
Okay. We do have a few questions that came in. The biggest question is whether or not your slides will be available to the audience after the event.
That's really cute. Now, I am not the keeper of the copyright on all my materials, but Shauna Knapp is usually the keeper of the copyright. So I don't know the answer to that, but we will have it in just a moment. Let's ask. I don't have a problem sharing it. Sean, are you there?
That's fine. We could do that, yes.
Okay, got it. Okay, so the thing is, it's the only thing that I say, the only thing I request is if you use something, feel free to use some of the charts and the materials for learning or with your clients. You can't take it and give it to another company. You can't do that because that is copyright infringement. This is Danforth specific material, okay? Okay, good one. Alex, thank you for asking that question, and we'll make sure they have it. Absolutely. Okay.
Perfect. And then I know we're kind of running a little bit late on time. Any questions we don't get around to answering right now live, we'll send out a follow-up with answering all those questions via email, just so you guys know. Okay, so I feel like a couple of those you've already answered. One of them was, are we still experiencing low inventory leading to multiple offers in those areas?
Okay, good. Great question, because that is really dependent on the area and the price point. Also, you're going to notice right now, I will talk just a quick little bit about jumbo money. Jumbo money right now, a lot of lenders are like, same thing Bob was saying, everybody's so busy with other stuff. I just talked to a lender the other day about a jumbo product, and he said, Denise, not now. I can't even talk I can't do it right now. I'm slammed. So that, again, you may not find multiple offers in that higher price point because a lot of people cannot fulfill. If they can't get that money, they're not moving forward. So I would say that multiple offers are going to be dependent on the area and on the price point and on the type of product. Good question.
Awesome. Next question is, how will the hurt put on small businesses and their employees affect the local market?
Well, so first of all, what I said earlier, I absolutely really, I have a lot of heart around the small business owners. So what's happening right now is a lot of small business people don't know what's happening in terms of, okay, they've got this PPP loan, that's great, but they don't know, are people going to come back to their businesses? So what's happening right now is you have consumer concern with business owners. The moment that consumer concern lightens up, the business owner is going to be, okay, now we can move ahead with that purchase. Okay, we can move ahead now with selling our property and then moving closer to our business. So what we have right now is we are creating this pent up demand that is there, but is not being, we're not taking action on it. We have many people that can't take action. So what I'm seeing is, I think we're going to have a very late year for real estate. I think it's going to take time for people to calm down and see things. Remember, I talked about that recovery being a W, not a V. I think what's going to happen is people are going to be like, okay, it looks like the COVID thing is getting under control, but what's going to happen in the fall? I hear that COVID's coming back. That's why I say we will possibly have a W recovery rather than a V. But it's going to add to the demand that's there. People aren't going anywhere. We're not going to delete our buyers and sellers. We are going to delay our buyers and sellers. So it's not a deleting market, it's a delaying market. Great question.
Okay, the next one is pretty area specific. Wondering if you have any thoughts or insights on the Boeing employment and the Everett area with employment growth for the next 12 to 24 months.
Well, that's so first of all, Boeing, as we know, is back at work now. And the same thing, you have to go back in time. You have to go back to the fundamentals of our market. The thing is that everybody, for example, when you think about travel and airplanes and airplane manufacturing, everything is going to get hit. because of what's happened with COVID. But I will tell you, even travel will pick up again. We're seeing that right now. Alaska Airlines just talked about how they're noticing travel increasing. And so when travel is back, when the demand for the purchase of airplanes is back, we will be back. But will this have any effect on the market locally? Absolutely, because you've got a lot of Boeing employees that were furloughed. You've got some Boeing employees that were laid off. You've got some Boeing employees that their jobs are changing. But I don't think this is like years ago where, you know, people were like, let's shut the lights out. We're not in that kind of market. But anytime you take a big employer like Boeing and there's any kind of change to its regular stream of business, of course it's a slowdown, but it is a delay. It is not a delete. So keep that in mind. Is it going to come back? Yes, absolutely.
Gotcha. Great. Great
Well,
answer.
Alex, I think we're at 12:03 right here. I want to be respectful of
Yes.
Denise and Shauna's time, and then try to end this around noon like we planned.
Perfect.
So I want to just come in here and say thank you so much, Denise and Bob and Byron. I mean, what we want to do is add value, and then also give our brokers something to talk about with their clients. You were talking about that earlier, Denise. Is have the talking points and have some value you can add to the conversation. And I think this panel did exactly that. And I just want to thank you all for contributing so much.
Awesome. Good job, team.
And we want to have you back. I think like Bob was saying, this is we need to have you back the next month or so when we start seeing some more additional changes, and this is a great venue for doing that. So thank you so much.
Yes, absolutely. Thank you, guys.
All right.
Be positive. Be real estate warriors, not real estate worriers. Get out there and help your clients. They need you now more than ever before.
So true. All right. Thank you.
Thanks, Denise.
Thanks, guys.
Take care. Bye-bye.
Take care.